Hello, family. You're welcome back to Mary Forex Up channel. If this is your first time seeing my videos, this is actually part of the series which I've created for beginners and struggling traders who want to trade with clarity and confidence. Okay, so I strongly recommend you go back to the first video which I dropped earlier, where I explained what Forex trading is and the three types of Forex traders. Also, I gave some key foundational knowledge you need to succeed in Forex trading. So that's the base, and this video is the next step forward. Okay, so let's get into today's video. Today, I'm going to show you 4 essential steps that every trader must follow to trade consistently and profitably. These steps are not random. This is the structure which I personally follow and which I teach my mentorship students. So that's what I'm introducing to you. All right. So if you've been trading without a clear plan or copying signals with no real understanding, these 4 steps will give you structure that you have been missing. The 4 steps are what to trade, how to trade, when to trade, and strategy to trade. So if you know these 4 steps, you should find Forex trading simplified. So let's start with what to trade. This is where many beginners miss it. Before you click buy or sell and make market execution, you need to understand what exactly you're trading and how the decision you're about to make will affect your outcome. Okay, so under what to trade, we have number 1, brokers and financial instruments. Also, we have lot size application, and we have the stop loss and take profit application. Let's start with brokers and financial instruments. As I said in the last video, I talked about what broker is and what financial instrument is, but I'm going to go over it again. A financial broker is a regulated company that gives you access to the Forex market to trade financial instruments. So a financial instrument also is what you are actually trading in the Forex market. So I feel that is simple enough for you guys to understand. So for example, when you open an account with a broker like Deriv, they connect you to the global market so you can buy or sell currencies and other tradable assets directly from your device phone. You can trade with just a smartphone. I said that in the last video also. You don't need a laptop. If you have a laptop or a tablet, that is a bonus for you. I go out most of the time. I use my smartphone to take trades and monitor my trades. Is when I'm at home, I either use my laptop or my tablet. You can trade with just your smartphone. If you want to start up Forex trading, you have a smartphone, then you are good to go. Okay, so firstly, you need a good broker to know what to trade. You need a good broker, and that is your access to the Forex market, and that's your access to the financial instrument also with your trading. So I personally use Deriv or Deriv. I call it Deriv. So I personally use Deriv, and it's beginners friendly. It offers fast execution and give access to both Forex and synthetic indices. So I recommended that if you're a beginner, you should start with synthetic indices first, understand the way the market works, then you can go into currency pair. So you'll be trading instruments like currency pairs. If you're using a derived broker, you'll be trading instrument like currency pairs. Example is the Euro USD. I told you currency pair is the pair of 2 currencies together. The Euro is a currency, the USD is a currency. It's been paired together is a currency pair. That's a financial instrument. So that's an example of the currency pairs. We have the synthetic indices also, which is the likes of volatility 10, step index. There are a lot of them. But you can also have access to trade commodities and more using Deriv broker. So make sure you choose what you understand and what you can manage properly. So that's that about brokers and financial instruments under what to trade. You need to know that that's what you are using to trade. So still under what to trade, we have the lot size application. So the lot size determines how much you are risking per trade. If you're using a small account, you start small by using the micro lots. If you're using a small account, you don't jump to using the normal big lots like every forex trader, like maybe the mentor you come across. You start small by using the micro lot. So you need to understand how the lot size works before you start trading. It's still under what to trade. You need to know how you go about trading. You don't just click buy and sell and gamble. You never place a trade without calculating how much each pip movement means to your capital. So like I said, use micro lots if you're using a small capital, or if you're using a big capital, you know the lot size you're using to maintain your risk level. The next is stop loss and take profit application. Now, stop loss and take profit is basically what you need when you make market execution. Your stop loss always protects your capital. You set your stop loss to prevent large losses, and you set your take profit to close out your trade automatically in profit. Also, the stop loss can be closed in profit, not in loss, if you apply what they call break even. So all these are what you would learn as you start trading. You might not understand it yet. Okay, so applying stop loss and take profit is one of the rule alone that separates disciplined traders from gamblers. So it is something you have to take serious. So you can see what to trade is not just you knowing what to trade. You need to understand the broker and financial instrument which you trade in. You need to understand the lot size you're using to trade. You need to understand how to place your stop loss and your take profit. So let's go on to the next, which is how to trade. Now that you know what you're trading, let's talk about how you actually trade profitably. Under how to trade, we have market analysis, we have trading strategy, we have trading psychology. So all these are under how to trade. You must know how to analyze the market, which is market analysis. You must have a trading strategy which you use. You must have a good trading psychology. So all these are very important, and you have to know them to know how to actually trade if you want to become an independent trader. I talked about the 3 types of trader in the last video. So becoming an independent trader, you have to know all these things. But if you're still a dependent trader, you can rely on somebody that is profitable before you become independent. It takes a process. Okay, so let's start with market analysis. Now, you need to understand the market, that there are 2 major type of market analysis. There's the fundamental analysis and the technical analysis. The fundamental analysis is the analyzing of news, economic events, reports, and interest rates. So the other, which is technical analysis, which I feel is the most important, is the using of your chart, support, resistance, price patterns, and market structure to get market opportunities. Basically, you using past price action to predict future price action. So I personally use more of technical analysis. Both are powerful tools actually, but I use more of technical analysis. And you don't need to master both right away. You can just start with one and build up. So I trade using technical analysis on synthetic indices. I told you synthetic indices offers only technical analysis, and it's 247, unlike currency pair that is 245. So if you don't want to trade synthetic also, you can trade currency pair, but you have to avoid news trading days. It's what they call news trading days, the days that whereby the market are extremely volatile. So you just avoid those days, which you need fundamental analysis for. Okay, so I'm going to be doing practical teaching on market analysis for beginners in the next video. So make sure you put on the notification so that you'll be notified once I drop the next video. So let's go on to the next under how to trade, which is trading strategies. Now, here is the game changer. You need a system that gives you confidence, and that is the trading strategy you are using. I personally, I use the mirror snipe strategy. That's the strategy I use and my students. So we use the mirror snipe strategy, and it's actually simplified and built to help snipe clean trades, following the trend and not chase the market. So I'll be teaching mirror snipe strategy in the next video as well, together with the market analysis. So on the mirror strategy, we have two strategies. It is broken down into two. We have the mirror T zone strategy, which is the turning point or turning zone strategy, and also we have the mirror entry strategy. Now, the mirror T zone strategy helps you identify potential reversal and price zones where you feel the market is going to make reversals. You apply mirror T zone strategy to get it, and the mirror entry strategy shows you exactly when to enter the market for maximum precision. Are you following? So you have to apply both strategies to get accurate trading opportunities. There are other trading strategies which you can use. My trading, as much as I use my trading strategy, I still apply other trading strategies to get accurate trading opportunities. Applying multiple trading strategies to get the same trading opportunity is called confluence. So I apply confluence to get more assurance and to do double confirmations before taking market execution. So other trading strategies which I'm going to be breaking down also are the top-down analysis strategy, the liquidity zone strategy, the break of structure strategy, the trend line strategy, and the flip zone strategy. So I'll be doing breakdown on all these trading strategies in the next video. So if all these sound new, don't worry. In the next video, I'm going to show you exactly how the full strategy works step by step. Okay, so let's go on to the third under how to trade, which is trading psychology. Now, this is where 90% of traders fail. Yes, you need trading rules and regulation. You need a good risk management skill. You need a good trading mindset to be profitable. So trading rules and regulation are rules that you must follow strictly. Risk management also is just as important because you are meant to risk the amount you can afford to lose. As much as Forex trading is profitable, there are losses involved. So you have to risk the amount you can afford to lose. What we do is we trade according to the market movement. We can't control the market. So the market can go against us sometimes, but your risk management is what will make you profitable. Knowing how you spread your risks across your trading days. All right, so there will be bad trading days, but obviously, if you are applying good risk management skill, you would still come out profitable. Another is your trading mindset. So, as a trader, you are expected to stay calm, patient, and be emotionally balanced. It's very, very important. So, I have my trading rules and regulation and also my trading plan, which I follow strictly, and they are very valuable. But if you want me to share them with you, click on the link in my bio and send a direct message. All right, so I'll be putting my trading rules and regulation and also my trading plan across to you. And along the line, I'll probably do a video on my trading rules and regulation on trading plan and drop on YouTube here. Forex is actually not a game, it's a skill, and psychology is the foundation of that skill. Okay, so let's move on to the next, which is when to trade. That's the third essential steps to follow to be a profitable trader, right? So when to trade is also very important because timing is a major key to profitable trading. So under when to trade, we have trading time and opportunity, and also we have entry zones and opportunity. So under trading time and opportunity is basically the time you are given as a trader or you are expected as a trader to trade. So the Forex market is open 24/5, the currency pair market. Not all hours are worth trading. So you focus on sessions. So the two sessions I would advise is the London session and the New York session. There are other sessions. The London session opens from 7 a.m. to around 12 p.m. West African time. So you are expected to trade within this period alone if you want to take trades for the London session, right? But the other session, which is the New York session, is from 12 p.m. to 5 p.m. or more. But if you want to take trade, you're meant to look for trading opportunities within this session. So there are other trading sessions also, but these are the sessions which I would advise since you're a beginner just starting up. All right. So you take trades only within this period. That is your trading time and opportunity. That's when the market moves, and that's when the market is quite volatile, and you are expected to trade or take trades as a trader. So you're not meant to waste time in the wrong sessions. But if you're trading synthetic indices, it is 24/7. That is, there is no closing time. You can take trade anytime. Just get your trading opportunity right. You can take trades anytime if you're trading synthetic indices under the Deriv broker. Now, I must say that it is only Deriv broker that hosts synthetic indices, no other broker. So you are expected to have an account with Deriv if you want to trade synthetic indices. So if you want to do that, the link is in our bio. You can just go there, click on it, and open an account under Deriv. All right. So let's go to the next one, which is entry zones and opportunity. So even at the right time that you're meant to trade, that is the trading time and opportunity, you are not meant to rush. You wait for your entry confirmation. I apply mirror entry strategy under the mirror snipe strategy, right? To get entry opportunity. Now, aside that, you can also apply other trading strategies. Like I myself, aside applying mirror entry strategy, I could also apply break of structure, liquidity grab, or a retest. Okay, so it's me applying confluence, like I said, multiple trading strategies to get the same trading opportunity. If mirror entry strategy is telling me to buy, I can check with the liquidity. If it's also telling me to buy, that's two confirmations. The trend line can also be telling me to buy, three confirmations, and on like that before I take my N3. I don't just take entries into the market, so I wait for the right time. Okay, so I always apply confluence. It's something very important, part of my rules and regulation which I follow. So discipline here is what helps you profitable. Being disciplined with it is what helps you profitable. So let's go on to the next, which is strategy to trade. Now, this final step is what brings everything together. Your trading strategy, the strategy you use to trade. This is a step-by-step method that tells you when to enter, when to exit, and what to avoid. So it's what to remove fear from guesswork. So this is an example of me applying trading strategy. You can see all trades we are taking here intentionally and strictly using mirror snipe strategy. That is mirror T-zone strategy and mirror entry strategy. So in the next video, I'll be doing a practical teaching on market analysis, and I will walk you through my full mirror strategy so you can see exactly how I enter my trades and grow accounts with consistency. So make sure you're subscribed and turn on your notification bell so you don't miss out. Now, if you're watching this and you feel like you need someone to guide you personally through everything I just explained, then I've got you. I offer two mentorship packages, the beginner's mentorship and the private mentorship. The beginner's mentorship are for those who want to start right with the proper guidance and mentorship. The private mentorship also is for one-on-one mentorship with full support, breakdowns, and personal coaching. So if you're serious about becoming a profitable trader, click on the link in my bio and send me a DM, and I will give you all the details you need. All right. So let's build your skill and income the right way, trading the right way, or not trading at all. So we've covered the 4 essential steps, from what to trade to how to trade to when to trade to strategy to trade. So follow this structure and your trading journey will become clearer and smarter and also more profitable. So like this video if it brought you clarity, and also comment your thoughts or questions below. Subscribe to the channel so you don't miss out on the trading strategy video coming next. Okay, so I'm rooting for your success, and let's build your trading journey together the right way. See you in the next video.